Greetings, good people! Here I am in the south of France, walking through these beautiful, majestic vineyards. You crypto millionaires might want to buy a bottle or two. Probably not invest due to the French taxes, right? But what if I told you that those crypto millions you made in your personal name can still be put on the radar of your local tax authorities, and even if you cashed out into a so-called tax haven? In my previous video, I showed you how you can move your cryptos from a company into a reputable bank account tax-free. And today, I want to touch upon a crucial point that I made over there, which is you do not want to own your cryptos in your personal name. If you ask any multimillionaire or any billionaire, they'll all say that they do not trade cryptos in their personal name, but into a corporate account. Why is that? Well, you probably bought your cryptos on a centralized exchange in your own name, going through biometrics in your facial scan, giving your documents, your ID, your passport. And now you finally made your millions and you want to cash out in a tax haven because some YouTube promoter said that Dubai has 0% tax on personal crypto gains. But here's the truth. It's a trap. Just ask Roger Ver. You see, every crypto transaction you've ever made is recorded and stored on the blockchain forever. It's permanent, it's transparent, it's public. And all of a sudden, your crypto millions that you've made are visible to your tax authorities years down the line, even if there is no immediate danger or threat. In the next few minutes, I'll explain to you why these 0% personal income tax jurisdictions for cryptos are a trap, and why you should consider using corporate or institutional trading accounts when dealing with cryptos. If you've already made millions in your own personal name, highly recommend you to at least mix and tumble it for privacy reasons. Anyway, let's get started. So most of these YouTubers, they'll tell you just go to Dubai, get a residency over there, cash out in your personal name, after all, 0% personal tax. Sounds great, right? Well, here's the catch. You can't actually do it through a corporate or an institutional account tax-free because they have a 9% corporate tax since 2023. And the same thing applies to many other countries such as Turkey. I actually spent 2 months in Istanbul last year, 3 months in Turkey in total if you count Northern Cyprus, and over there as well. For personal income taxes, there is 0%. And so most people trade through their personal accounts. Except the wealthy. You see, while I was in Istanbul, I was able to meet a couple of well-to-do over-the-counter dealers. And they told me that they never cash out in their personal name. Why is that? After all, it's 0% personal income tax. And they told me that they use nominees, trusted confidants, people from the streets sometimes, just to put their millions into their own bank accounts. Why would they do these illegal maneuvers instead of just doing it the legal way and going through a personal account? Because they know far too well that what the government giveth today, they can taketh away tomorrow. What is legal today, what is not taxed today, can change in a heartbeat, and they don't want to be caught off guard. And that's why these people in these countries do not go through these loopholes, because they know that everything on the blockchain is public, it is permanent, it is transparent, and years down the line, you'll have a crypto tax, and they'll be able to see the ledger, they'll be able to see your blockchain transactions and say, okay, you owe us this much. Now you may be telling yourself, what is this guy talking about? Dubai has 0% tax. As a French, UK, or German citizen, I can go there, get residency, and be tax-free. After all, there is no such thing as retroactive taxation, right? First off, on the point of Dubai being a very tax-friendly country, well, that's about to change. If you look at already the corporate tax, the fact is that they can afford to start taxing way more because so many people have moved over the past 2 decades. And then on the second point about retroactive taxation, again, I keep pointing out to Roger Ver. He's a perfect reality check on what a person from the land of the free, the United States, he became a St. Kitts and Nevis citizen in 2014, renounced his US citizenship. There was no such thing as a crypto tax at the time. In 2017, he sold his Bitcoin in St. Kitts and Nevis, 0% taxed country. And now, years down the line, he's being persecuted by the IRS for unpaid taxes. Even if you send your money to an offshore bank undeclared, it requires more effort from your government in order to retrieve the information. They might even have to fly to the jurisdiction that you're hiding your money in. With cryptos, they can literally find all that information from their home office without leaving their comfort of their chairs. That's how public and transparent it is. That's why I keep emphasizing that you need to use a corporate or an institutional account to trade, or if you've already made your millions, at least use privacy coins such as Monero and off-ramp it through an over-the-counter dealer, or use mixers and tumblers. Chain hopping works very well as well. If there's anything I've learned in life, it is to pay attention to what the wealthy do with their money. After all, they're good at it, okay? And if they're not holding it in their own name, then there's probably a reason for that. You can go to countries such as El Salvador or Panama where there's 0% corporate taxes and hold all of your cryptos through an institutional account over there. More expensive options will be Cayman Islands, or if you want more anonymity, Northern Cyprus, but don't hold it in your personal name. And you can use an agent or a nominee to do all of the KYC verification. And in the case of Roger Ver, he actually owned all of his cryptos through his company, Memory Dealers. The problem was that he was the majority shareholder. His name appeared in all of the official documents. And on podcasts, in videos, he would constantly tout how much crypto he owned, that he was Bitcoin Jesus. And when you start attacking the government, in his case, he started making a book, which is very good, by the way. I highly recommend it. But John McAfee did the same thing, and may he rest in peace, he's now dead. So this is a bit of an issue with our generation. Unfortunately, I do have qualms with it. But as the saying goes, nobody buys fire insurance until they can smell the smoke. Problem is, by the time you smell the smoke, it's probably too late. So that's why you want to shield and sever your wealth right now while you still can. Anyway, that's it for today's video. If you enjoy this type of content, be sure to subscribe, put a comment down below. It really helps with the algorithm. I'll be probably making a future video on why Dubai is not an optimal tax optimization destination anymore. But until then, bye-bye.